Alyssa Greenspan is the President and Chief Operating Officer at Community Capital Management, whose mission is to deliver superior risk-adjusted returns through investment strategies that contribute to positive environmental and social outcomes. Alyssa joined CCM in 2003 as a portfolio manager and was named president in 2015, and is responsible for managing all day-to-day activities and operations of the firm, as well as overseeing risk management, client services, and sales and marketing. Alyssa will talk today about how Community Capital Management has expanded their fixed income strategies to create impact in the sustainable agriculture sector.
Great, thank you so much. And I'm so pleased to be here today. I'm just trying to, let me see if it's working. There we go. Okay, I want to thank Christy and the whole team at Croatan. We're very pleased to be here today to discuss how public debt or fixed income can play a role in this topic, resilient farm and food system finance. We've been proud supporters of Croatan's Clean Portfolio Project since its inception, and my firm, Community Capital Management, has almost a 20-year history of impact investing. And by impact investing, what that means is basically seeking market rate returns via investment strategies that contribute to positive environmental and social outcomes. So there's no give up in the returns, and it's having the ancillary benefits of somehow positively benefiting society. So I'll just give a little bit of background here on Community Capital and then go into some more specifics on how we invest in sustainable agriculture and healthy communities via these high credit quality fixed income securities. So Community Capital, as I mentioned, we've been making impact investments on behalf of our clients for about 20 years. I was very excited to join the firm in 2003 after realizing that not only was I going to be managing fixed income portfolios, which is exciting enough, but that each and every investment that we were making had some sort of ancillary economic development benefit, be it affordable housing or environmental sustainability. Since then, we've grown to about $2.2 billion in total assets, and due to the power of active portfolio management, that translates into over $9 billion in impact and environmental, social, and governance initiatives nationwide. Now, most of our investors are institutional investors, but we do offer our flagship fixed income strategy and a mutual fund for retail investors as well. We also offer, as you can see, separately managed accounts in various strategies, equity mutual funds, and a liquid alternative fund. All of our fixed income strategies are fossil fuel free. So our fixed income investment philosophy is really grounded in three core beliefs. So we believe that fixed income should be a stabilizer in a diversified portfolio. You don't want volatility from your fixed income portion of your portfolio. Fixed income can also have a positive societal impact, and it can deliver attractive risk-adjusted returns. So given that, what we do or we seek to do is invest in high credit quality, well-researched securities. And each and every security, we do analysis on the use of proceeds, meaning what is the project that's being financed by that particular security, and how can it be measured from an impact standpoint. We actively manage a portfolio to take advantage of opportunities and reduce unnecessary risks, like any active fixed income manager should. And we're looking to build a portfolio that keeps risks lower, income higher, and diversification benefits that are better than the broad investment grade bond market. So that's our philosophy. The next slide shows what we call opportunity set, which is just a jargony investment term for basically what sectors do we invest in. So these are the sectors of the bond market that we're investing in on the left-hand side. And where we differ from other fixed income managers is you can see across the top line, the impact themes. So we have 18 impact themes, and these range from affordable healthcare and affordable housing to sustainable agriculture and healthy communities and rural community development, among others. So before I go into more on the impact themes, specifically on sustainable ag and healthy communities, let me just give a quick overview on the fixed income sectors in case there are those on the call who are not familiar with these various sectors. So agency CMBS is agency commercial-backed securities. These are includes various mortgage-backed securities where the underlying assets are commercial real estate. Typically multifamily housing is what we see here. Agency MBS is shorthand for agency mortgage-backed securities. And basically the single-family residential mortgage market consists of primary mortgage market in which lenders make loans to homebuyers, and then a secondary mortgage market, which we're involved in which mortgage lenders exchange loans for mortgage-backed securities. We custom create these securities with mortgage originators and invest in U.S. single-family agency MBS that are backed by Fannie Mae, Freddie Mac, and Ginnie Mae, which are all government or quasi-government agencies. Taxable municipal bonds are debt obligations of a state or local government entity, and these are subject to federal taxes, different obviously from tax-exempt bonds, tax-exempt munis. They can finance a variety of projects that benefit communities and the environment, and I'll give a couple of examples in a little bit. Asset-backed securities, or ABS, these are financial securities backed by a loan, lease, or receivables against assets other than real estate and mortgage-backed securities. And then finally, corporate bonds, which most of you are probably familiar with. These are debt securities issued by a corporation for the purpose of raising capital. So going back to the themes listed horizontally, you can see that healthy communities and sustainable agriculture are all well represented among these 5 sectors. So we're able to build a diversified portfolio of taxable fixed income securities impacting or benefiting these 2 areas. When we talk about healthy communities, we define it as neighborhoods that seek to achieve healthy equity by having access to nutritious foods, having multi-use trails, walk trails, having high walk scores, high bike scores, community parks, and also investing in opportunities that promote health and wellness. And sustainable agriculture is defined by supporting agriculturally sustainable businesses, such as those that may be engaged in pesticide-free agriculture, hydroponics, aquaponics, etc. So before I go into some examples, real-world examples, I just wanted to give you a quick overview of our impact statistics. So as I mentioned, we've been doing this for about 20 years, and that's we think, a lot of impact. So over $9 billion invested in impact and ESG initiatives. And this translates into different categories, so to speak. So we try to provide as much granular detail as possible on the actual metrics. So we know that we've invested in, on behalf of our clients, in properties that have created 395,000 affordable rental housing units, over 19,000 home mortgages for low and moderate income borrowers, over almost 350 million enterprise development and job creation, et cetera. We've done about 600 million in economic development, which also includes neighborhood revitalization and environmental sustainability. On the right-hand side of the screen, we have a pie chart of our theme breakdown, and this is cumulative since inception. As you can see, our healthy communities is about 8% of all the investments that we've made over time. Unfortunately, our sustainable ag number is quite low at 0.1%, and we can talk about why this is the case in a little bit, but this is definitely an area that we are looking to expand. And finally, we get asked this question a lot, well, how are individual investors or someone maybe new to the impact investing market, how are we able to target sustainable ag or healthy communities or any one of these themes? And what we do is we have a mutual fund, as I mentioned before, that not only has a dual mandate of investing in high credit quality securities, fixed income securities, that are also positively impacting communities throughout the nation, but investors can direct their investments into a particular impact theme, be it sustainable agriculture or healthy communities. We've created an internal proprietary system that tracks each and every shareholder's investment in the mutual fund. Typically it's above $500,000. We enable this impact targeting, and we track their impact theme or the geography that they've selected. What's beneficial is then we follow up with impact reports. So each and every bond that we purchase has a write-up on what the positive impact is. We try to do it from both a quantitative and qualitative perspective. And we call this process earmarking, which it can be a little technical because most people aren't used to seeing something like this in a mutual fund. But if you're interested in hearing more, I can certainly answer any questions. And then there's a neat video. We think it's a neat video on our website, which is www.ccminvest.com. So an easy way for new investors or smaller investors to get involved and really target what they're what their mission is and what they're looking to benefit. So let's get to a couple of examples because I think this always helps resonate. with, especially in a webinar, you know, what are the stories behind some of the investments that we've made. So this is one of my favorites. I love this story. Rooster Valley Farm School is in King County, Washington. It's a preschool, and every day the kids are interacting with farm animals and actively working and playing in a productive garden. They plant, they harvest, they're taught the life cycle of plants by actually doing it. Children are learning about farming and soil and water. And what's great is that the foods that they are growing are then incorporated into their daily snacks and weekly cookout meals. So I only wish that I'd gone to preschool like this, because that would have been really cool. But they didn't have preschools like this when I was growing up, at least not in South Florida, where farming is a little bit more challenging. But anyway, this is an example of an asset-backed security. I mentioned before the sort of 4 or 5 different sectors that we're investing in, and this would be an asset-backed security because it was a small business administration security, or SBA loan. Another example, and this is a taxable municipal bond, so just tying it in with the bond market. The Minnesota Rural Finance Agency, which is the state's main agricultural lending arm, they issued a taxable municipal bond to finance various credit programs to farmers throughout the state. There's a lot of details here, but just a couple that I'll highlight. The Beginning Farmer Program, loan program, is for younger farmers who have expressed an interest and have started to farm and intend to, over time, become full-time farmers. And then the Agricultural Improvement Program, which is meant for financing new state-of-the-art improvements to existing farms to really help them with their agricultural production. And that's an example of a taxable municipal bond. And then my last example is a corporate bond. We don't invest heavily in corporate bonds because typically the use of proceeds analysis, or the ability to track where the dollars are going from corporate bonds, is harder to do. But in this case, Starbucks issued a bond a couple of years ago, and the proceeds were being used specifically to enhance their sustainability programs as it related to coffee supply chain management. They have various eligible sustainability projects, including working with coffee, or only doing coffee purchases from suppliers who adhere to the CAFE practices, coffee and farmer equity, for example. Or it was also used to help develop farmer support centers and research and development centers. And it also helped to finance new and refinance loans through their $50 million Global Farmer Fund, which helps alleviate access to finance issues that many farmers might have. In fact, over 40,000 farmers were benefited by this fund, this particular fund alone. So it was a great corporate bond from that standpoint, from an impact standpoint, and the fact that we were able to track and quantify the use of proceeds made it attractive from an impact standpoint, and then also from a financial standpoint, because that's part of going back to sort of the dual mandate that we're always looking at bonds from both a financial standpoint and impact standpoint. So I will leave it at that. Hopefully you found this informative, and I look forward to answering any questions that you might have. Thank you very much.